Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video we'll understand what is exactly happening in TTML stock, which is currently in lower circuit. TTML is basically a subsidiary of Tata Group and which operates into telecommunication. So basically we can understand that the stock is currently in a lower circuit. So what is upper circuit and lower circuit? Whenever there are no sellers into a particular stock, then that is known as an upper circuit, and whenever there are no buyers in a particular stock, then that is known as an lower circuit. So this kind of move generally happens when there is some kind of speculation in that stock, or the stock has some kind of news regarding future prospects. Such kind of moves are generally not sustainable into the stock market, because some or the other time these valuations will be considered by the investors, and hence these stocks will be beaten down drastically as they have risen up from the lower levels. Now during such times, the people those who have entered at lower levels at around, for example, 60, 70, 80 rupees generally enjoy higher profits within a smaller period of time, while the people those who have entered at a higher levels regret buying this stock as they are now stuck into lower circuits and they can't exit from this particular stock. Similar kind of moves was seen in the past also in our own markets, where Alok Industry from a bottom of 6 rupees made a top of 60 rupees and then traded into lower circuits, and many people got stuck into this stock and has been trading into the same range from the past 1.5 year. And Ruchi Soya, one another favorite stock of retailers, where most of the people got stuck at around 1500 1600 rupees, and then it made a low of around 500 to 400 rupees. So whenever you enter into such stocks where there is a speculation, the risks involved are pretty much very higher, because the valuations are too much extended, thinking about the future prospects. Coming back to TTML, let us understand what are the next levels for this stock. One level that I can see in this stock is particularly the 50 EMA, that is trading at around 177 rupees, and the second level which I see in this chart is at around 145 rupees, which is the reversal zone for this stock, where in the past it had taken a resistance and now it had taken a support in the last time. So this could be an area where there can be some kind of relief to the investors. What I would suggest is never enter into such kind of stocks where there is no fundamentals involved and only speculation is going on. As the stock has already run up around from 40 rupees to 200 rupees within 6 months, then such kind of moves are generally not sustainable, and it wouldn't give you any kind of returns in the coming future. If we look at the fundamentals of this stock, the market cap of company is at around 40,000 crore rupees and the CMP is 193. The book value itself is in negative. If we look at the PE ratio, the EPS of this company is negative. That means the company is not able to make any kind of profits. If compared to peers, the company is totally a very poor choice of stock selection, which is my view. If we see the profit after tax or the net profit is in negative from the past 2 years, and if we look at the operating profit which is in positive, but profit before tax and profit after tax is in complete negative zone. There is no sales growth in this from the past 10 years, and there is no profit growth in this from the past 10 years also. So if we look at the balance sheet and the shareholding pattern also, there is no such kind of interesting thing that is happening in this company. The FIIs or DIIs have no interest in this particular stock, while the promoter holding is very good, which is around at around 75%, and the public is having around 25%. I don't see any kind of future prospect in this company unless and until that future prospect is reflected into the balance sheet and the fundamentals improve. One has many different other choices apart from that company, like Bharti Airtel or Tata Communications, and there are many other opportunities lying in this sector. So that is completely my view. And if you have invested in this stock from a lower level and you get an opportunity to exit from this stock, then what I would suggest you is to exit at around 176 rupees and 145 rupees. One should definitely try to book their profits and at least take out their invested amount or invested capital so as to protect their own capital. One, if you want to invest fresh into this stock, these are the two areas where one should think of investing, that is that to only 1 to 2% of your whole portfolio, so that the risk involved is not much higher. And this is purely based on speculation, because as you can see there was no fundamental story in this stock and only speculation. Recently you can see in Paytm or in Zomato, if a company is not able to make profits in a longer term, or then the valuation will definitely be beaten down very harshly by the investor. If the stock does not stabilize at around 144 rupees, it may even come till at around 77 rupees and at around 128 rupees. After 128 there is no level in this particular chart, and hence these are the four levels where there can be a re-entry of this particular stock. And what I would suggest you is to find better opportunities in this stock market. And